gentlemen, good day and welcome to DCX Systems Limited Q2 FY24 earnings conference call. As a reminder, all the participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. The statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Dr. Raghavendra Rao, Chairman and MD from DCX Systems. Thank you, and over to you, sir.
Thank you. Namaste and good evening, everyone. My name is Raghavendra Rao. I am the CMD of DCX Systems Limited. I extend a warm welcome to all of you for a DCX Systems Limited earnings conference call for the second quarter and half year ended September 30th, 2023. I would like to start by thanking you all of you for taking the time to join us in today's call. We have our CFO and full-time director, Mr. Ranga, and Mr. Shivakumar, VP Operation. As this is only our third earnings conference call, I would like to provide a snapshot of overview of your company's financial performance and its recent developments. As you are all aware, yesterday we announced our Q2 result, and I will just highlight a few things on that, and rest our CFO and director will take the brief on the financials when I'm going to hand over the call to Mr. Ranga. For the first quarter revenue, we done about 309 crores compared to earlier quarter was increased by 77%. And also PAT rupees 20 crores will increased by 159%. And contributing factors, Mr. Ranga and the PAT growth will going to explain in detail when it's a chance given to Mr. Ranga. And recent development, I will likely to update investor on the latest development and milestone of your company as attended during the second quarter. And I am very happy to announce our own 100% subsidiary called Running Advanced Systems. It is giving me a pleasure to inform you that DCX wholly owned subsidiary Running Advanced Systems has started commercial production from September 2023. And DCX is as you mentioned in the EMS segment, and we have started fully compliance with all the facility and the approval. We started in the production. So DCX taken a strong measure to take this innovative, creating our own backward integration facility, mainly to the reason to control on our supply chain system and better margin on the DCX main system and have our own internal facility as per the customer demand. As you know, very high value what we are procuring from the other tier 2 vendors. Now we are fully ready to take this opportunity. Not only for captive business, we have started this company. There are chances and a bright future for EMS in India. And as we come out EMS background of 20-25 years, personally from my side and my team, and we are also very bullish on the getting the other program other than a captive business, and we are in fully focused on this business. This is the one update I like to give you. And secondly, for the last 3 years, as you know, we are working with a company in Israel, IAELTA Systems Limited is 100% owned and controlled by government of Israel. So last 3 years I was working for the opportunity to have a joint venture with them for the product. So that day has come and we just signed a joint venture agreement with ELTA. The progress of this basically obstacle detection solution for the railway sector. So ELTA developed the radar-based and optical-based solution. This has been ELTA is working with our Indian Railway RDSO from last 4-5 years, and it has been proven technologies, global technology, and presently the only global solution available with this IAELTA.
Mr. Ranga's line is having a bit of a disturbance, so can I request...
Ranga, go on a mute, please. Yeah, better. When the opportunity comes, just open the mute. Please go on a mute. Sorry. This is what ELTA is working with the Indian Railway RDSO. In fact, they installed 4-5 years. They are working with the railway department to achieve this trials and other things. So almost 2 trials has been done, and the major trial taken in the December when the fog test taking place. And of course, as you know, the biggest budget, the next biggest budget in India is the railway, and a huge requirement. So there are 14,000 locos are available in India, and they are, already 34,000 crores Indian Railway kept for the upgradation of technology. Not on the track, not on the engine. Purely this 34,000 crore has been allotted for the latest technology, like many things. Not only our program, there are many solutions, but ours is a different radar and obstacle-based systems. And as you know, recently there are in Odisha, there are big train accidents taken place, and about 300 people died. And 3 days back, there is an Andhra Pradesh accident. 9 people are died, 100 people, more than 100 people are injured. And our solution can give a very good solution for this, which we are working with ELTA. Why ELTA has come to us? Because this program is Make in India. So we just signed and announced in the BSc MSc also for the JV. And we see companies see a lot of big opportunity to support on the railway security and make things better performance in the railways, the area. This is a one big step, and of course, for 3 years recognition, we are earlier become supplier. Now we become a partner and supplier for both for IAA Group. And I'm happy to announce recently your company has been recognized and certified by the government of India, the Foreign Trade Policy Ministry of Commerce for the 4-star export house. This is a very, from 2-star to 4-star based on our performance on the exports, and we followed the strict rules and with the customs, and all the procedure has been followed. So we got that this certification recognition from for the export house status from the government of India. This is one, of course, this is a very big achievement for the company. This is going to ease out our exports, imports, everything. This is a good sign for supply chain movement and the recognition in the government India customs portal especially. So now I request Mr. Ranga to give overview of the financial performance of the company for the another half yearly. Ranga, please take over.
Thank you, sir. Good evening to everyone. I am Ranga here. It gives me immense pleasure to take
Ranga,
you 2 seconds. Yeah?
Ranga, your voice is somehow not clear, ma. I think.
Can you hear me now?
Better to
Hello?
keep away your computer to be away little. I think echo is coming.
Hello?
Yeah, it's better now. Please go ahead. Yeah, go ahead.
Yeah. Good evening to everyone. It gives me pleasure to take you through certain financial snapshots of your company during Q2 and half year ended 30th September 2023. Now coming to the standalone financial performance, in the second quarter of FY24, we reported a revenue of rupees 309.12 crores, representing a growth of 77.78% as compared to 173.88 crores reported during the corresponding quarter in the previous year. Growth was primarily driven by successful execution of order book. EBIT for the quarter reached 30.64 crores as against 15.85 crores in Q2 FY23. This was mainly the EBIT margin has also seen an improvement, raising to 9.91% from 9.11% in Q2 FY23. The PAT for the quarter amounted to rupees 20.41 crores, representing a robust increase of 159.28% vis-a-vis rupees 7.87 crores reported in the corresponding period of the previous fiscal year. For H1 FY24, we reported a revenue of rupees 479.23 crores, an increase of 23.79% year-on-year from rupees 387.13 crores in the same period last year. Our EBIT also increased for the half year to rupees 49.35 crores from 27.49 crores in H1 FY23. We observed an increase in our EBIT margin to 10.3% from 7.1% in H1 FY23. Improved operational efficiencies and supply chain measures helped improve EBIT margin. Profit after tax for the half year reached rupees 30.26 crores, demonstrating a healthy growth of 122% compared to rupees 13.64 crores in the same period of the previous financial year. That is all from our side. We can now open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, may we request you to press star and 1 to join in the question queue. Perfect. So the first line of question is from Sagar Parekh from One Up Financial. Please go ahead.
Yeah, good evening, sir. Thank you for taking my question.
Good evening.
Yeah, hi. I wanted to understand on this Renewal Advanced Systems, what kind of numbers are possible on an annual basis now, and how much have we invested till now in this business, in this subsidiary?
I'll answer the second question, sir. Then the beginning question he will answer. We have so far invested 8.6 crores as equity from DCX to Renewal Advanced Systems Limited. This is the investment from DCX.
And are we looking to further invest in this, or 8.6 is the final amount?
Maybe a couple of crores we may have to invest.
Sorry, how much?
Couple of crores.
Okay, so 10 crore is the total investment that is at the max?
Yeah, somewhere between that. Yeah.
Okay. And in terms of
it's not
P&L, how?
Sorry, 1 minute. It's not max. Somewhere between that it will be.
So about another couple of crores is what we'll possibly look to invest, right?
Around it will be 10.6 means it will be around 11 crores. That's what I meant.
Okay.
It's not a hard stop.
Yeah, fair enough. And in terms of numbers, how will it look like?
See, the business, as you know, we are in fully entrenched and just is a 1-month baby of Renil Technology. But we have a good opportunity, aspiration and the new requirement. And at this moment, I am not able to tell you the numbers. And most likely in next quarter, I can able to demonstrate my numbers to you.
Okay, but does this, couple of things in this. So firstly, the clients would have to, if we go for third-party kind of sales, then the clients would have to approve our facility, right? So has that happened or it will eventually happen? Yes. And initially the sales...
That I will give an answer. Now, as you know, our plant has been approved, one of my biggest client, and we got the certification also and also the appreciation also has been given in one of the finest international facility, and the team has visited, approved our facility. We have a certification also. And couple of other team is keep on visiting, and at moment we have a customer approval by 3 customer has been approved our plant fully without any remark or without any NC in the facility. So appreciation has been taken and the 3 customer is already approved on this.
Which area is this? Which segment? These 3 customers?
This is only, see, now normally in the area is a aerospace and defense only with existing customer, and also there are one new customer has been recently approved. And this is the majority, about 80% of people are visited on the aerospace defense only. There are railway requirement, there are medical requirement, and that visit is going on. And majority till now we have approved of 2 aerospace and defense company, and one is a medical company.
Okay, so one medical is also approved.
Yeah, yes.
Got it. And could you give us some sense on how, what are the asset turns over here and what are the working capital requirements in this business? If you cannot give the actual number, like in terms of what is the sales which is possible, but if you can give us some kind of, like for 10 crores or 11 crores of investment, what would be the asset turns and working capital and margins? If you can give some color, that would be really helpful.
See, this EMS facility, it is not a 8.6 crore. DCX invested a margin money, and Renil has taken a term loan from the bank and put the complete facility. Till now about, Ranga, if I am correct, 30-35 crores?
Yes.
30-35 crores has been invested for all the equipment. So DCX invested about 8.5 crores, and in that there is a term loan taken by the Renil Advance System directly from the bank, about 25 crores. So total investment about 35 crore as on today for the building and other capex.
Understood. And in terms of asset turns or working capital requirements?
See, working capital, we have a policy, as you know. We work as a completely on the advances with the existing customer or any defense. And presently, we cannot able to give you exactly the working capital requirement. And maybe please allow us the next quarter. We can tell you the roughly about working capital requirement. And as on today, I cannot give you any numbers of, because once you know the revenue, then only working capital comes in the picture, correct?
Yes.
So that's what. But working capital will maintain as good as DCX. The method what we are working in DCX, taking advance from customer about 70% or 30% or 40%. Similar way, this Renil also work like that. That is 90%. It will work like that. Maybe other customer, maybe general customer on the medical side or the railway side work with a different payment terms, but majority 80 to 90% works with the same method of DCX.
Okay, understood. Because the other EMS guys who are listed, they are all having very high working capital, so 90 to 120 or 130 days also.
Yeah. I will not give a chance. So present moment, our model is entirely, we have fixed some certain guidelines for the company. And of course, we are not like general EMS house. This is only dedicated for AS 9100 Class 3 programs and
right.
aerospace and defense. Maximum will expand railway and other things. So I will, looks like this is not like 200 days of collection or 120 days or something like that. We maintain as good as DCX, what we are, you're seeing the DCX model. Na? Same thing we like to maintain, and it is possible based on my customer, the class of customer, payment terms, and the requirement, and the fund flow, everything. So I'm very optimistic on the area. I will maintain the same thing.
Right. Thanks for that. And my last question would be on the main business. So we have seen order book shrinking since last 2-3 quarters. Now our order book is almost like 1250-1260 crores, which would probably mean about less than 1 year of top line. Any color or anything, any thoughts on this? Or would you like to share on where do you see order inflows? Because order inflows have practically dried up in the last couple of quarters.
See, I like to take this something to tell. This is not a business what we are running in the general commodity items. Normally, in my last 12 years experience, I will get every year 1 or 2 POs maximum in the last 5-6 years, but comes with a large value. That will be spread over to 3 years. Now, that's been supply chain got improved and there are requirements started in the new areas, and maybe yearly 3 times or 4 times we can expect the POs. So not like order is drained out. In my opinion, 1,260 crore is quite a good value as per the, I am the front end for marketing in the company. I feel it is not a bad figure for 1,260 crore. And also we have another 9 months to go, and the pipeline order was very bright, and we working with many programs. As I mentioned, we are expanding our business from the India, Israel, US, and also the European market. So the situation upcoming are very bright, and it should not be any problem to acquire more POs. So this is what we are thinking, and this is a traditional of any defense company to get POs in the every month or something like that. We are fully focused. We are working with many programs, many customers, and in fact, I will give you shortly once I have a couple of things to come out from the customer side, and all this all where I am working with a very, very large corporation and restricted with many national securities and those areas. So taking little time, and we are confident we'll get very, very shortly we'll get the order book to be spelled out, sell more.
Right. So in the next 6 months, before the end of this year.
I'm sorry to interrupt. May we request you to return back to the queue for any follow-up questions that you may have?
Okay, sure. Thanks.
Thank you. The next question is from the line of Dipen Vakil from InCred Equities. Please go ahead.
Thank you so much for the opportunity, sir. So my first question is on the line of our order book, sir. Is it possible to provide the split of the order book between our segments?
You need a present order book segment-wise?
Yes.
See, majority comes from the system integration, I can say about 70%. Okay. And the rest is mixed like kitting or cabling, kind of a thing. Majority 60-65% comes from the system integration.
Okay. So my second question is
cable and fitting. Yeah, please go ahead.
Yeah. So my second question is on the line of the geopolitical issue. So Israel is one of our main geography for DCX. So do you see any supply chain issues going on, whether in terms of import or even in terms of export? And on the flip side, do you see any positives or like increase in orders coming from Israel in near future?
Okay. Actually, to be honest with you, war is not a good for any country as a humanitical ground. And let me give some light on the war situation. And Israel, of course, we are not depend on 90% or 100%. We expand our other area. That means we are not reduce the say we are not, no, I don't want to do. No, we have increased other domains like India and other countries. We increase our business. Still about 40-45%. Still our business comes from Israel. Coming back to your war question, and first I will just explain what Israel must be aware. Israel is a very small country. There, the two revenue comes from, major revenue comes from the defense program where they are selling to other countries. The beauty is Israelis, they are good at design, development and the program management. Okay. Now you can see the supply chain system doesn't have any effect because we are not buying anything from the Israel at all. Let us take per module present program what we buy. We have a 3,000, 4,000 electronic components. We buy hardly anything from Israel. Everything will be bought out from US, Singapore, Taiwan or South Korea. So the supply chain is a general component. If other territory, they are not dependent on Israel, we are buying from the easily. There is no problem for the supply chain or any scheduled delivery by Israelis. Everything is comfortably going on. And secondly, war is not creating any supply chain issue at the Israel because if I remember, October 7th war started and Israelis are taken, that is Saturday. Sunday they close, Monday they are in office. We are getting response on the phone, we are getting response on the calls, we are getting response on the emails, we are getting payments, we are getting the clarification of the program, and we are getting certain consignment and small consignment coming from the Israel, and we are able to ship them out. I am not seeing any disturbance in this because of this war.
That is good to hear, sir. So, just any idea from your clients of any additional orders coming in during this time?
I don't know how to express this war. Of course, we have a special request from all my Israeli clients that DCX, they know, because I am the largest in India for electronic supplier. They told us to support 24/7 for the program for any emergency requirement, and we are fully geared up. As you are aware, Renil is fully ready and fully equipped, and also our cable and system integration, and also we have adequate manpower, adequate capacity, and we are supporting for them. Of course, there is a normally when the refill start, we should take care of the supporting customer. So we are supporting and we are gearing up for our manpower wise or the facility wise. And of course we are well, but of course there is a request from customer side to support them. And we are also working day and night to satisfy their requirements, whether it's a new RFQ or a production or the technical side. We are fully ready for that.
That is really helpful, sir. Thank you so much for answering my questions.
Thank you.
Thank you. The next question is from the line of Tirth Gosar from Swan Investments. Please go ahead.
Hello, sir. So, in your PPT you mentioned that DCX system plans to improve its profit margins by focusing on new verticals. So could you please mention what are those new verticals and would they be margin accretive? Or what is your view on that?
One is, good question. I was waiting for this question to answer. Thank you. Okay. Now, DCX is, I explained in my opening remarks, there are two areas we are concentrating. One is, Renal Advanced System has been fully ready, and we want to take the commercial production other than a captive business for the outside customer, which we are fully encouraged. That will give more visibility for our profitability improvement. And also the captive business also we can have better control on the supply chain and the cash flow or the better margins. Secondly, the railway is one of the biggest opportunity what we have for this thing. And upcoming days looks very promising because of the government of India is very, very serious on the railway securities because of the disaster is happening with the railway accident and stuff like that. And big budget has been kept for our types of securities for the 34,000 crores, the upgradation of real technology. We have a big cake to enjoy. In fact, I think we are fully focused on the revenue model and improve our EBITDA revenue. Both will going to happen. We are confident. Company is also working with Make in India program. This is the biggest opportunity in India. Recently there was a positive indigenation list. Approximately MOD has declared, our MOD has been declared $120 billion. It has to be manufacturing and consumed in India in 7 to 8 years' time. So, of course, it's a big number, and we are ready for this opportunity, either through technology, through the JV, or any other opportunity. Companies working towards these programs as well, and parallelly run our business so that customer comes to DCX today. We have a full solution. Like customer want any electronic product to be delivered. You require a PCB assembly, that is a major technology. You require a cable and wire harness. You need a system integration. You have a strong testing facility and the experienced people to handle. DCX is fully geared for all, whether you take railway or the present offset, non-offset business or the Make in India program. This will go into, and of course we are working with a organical accreditation with the other customer too. Because as you know, there's a big backlog of offset. I think DMW website says still $13 billion, and is a big numbers in the 7 years. Foreign OEMs has to, because they already got order, they have to execute this program. In that electronics, of course, not 13 billion belongs to our area. It's many things. So maybe electronics $4 or $5 billion is a requirement. We are also very, very aspiration to get more business because DCX set for those areas for electronics, and we are hoping the really company is fully focused on 4 things: existing offset, non-offset business, and the EMS. What we are put up the plant in Ranil, also Make in India for the biggest opportunity, and working with the technology with foreign OEMs to acquire and start manufacturing, deliver to MOD, and at upcoming days plans are there, and also railway JV what has happened today. So I think company has covered wherever it is possible for the growth of the increase in PAT or revenue. Yeah.
Thank you, sir. And in your PPT, you mentioned that you have established a new wholly owned subsidiary called NIAT Systems Limited.
Yeah.
What is the focus of that subsidiary?
Actually, I mentioned in the JV company what we had with IA Elta, the first company to be established in Israel. Because this is 50.1% by DCX, 49.9% by the Elta. First, that the company has to establish in NIAT is the JV company which has been registered in Israeli, where Elta and DCX they have a joint company there. And that NIARC is completely do the design, development of this railway obstacle detection system there. So we need to establish there to take this railway opportunity. Then once that is done, then finally, because we are not doing any manufacturing there. Because of Make in India, that company, if they get an order and from railway, so that will be, there are many channels for Make in India, and that NIARC company do the complete product design, development and technical software, everything. That is a joint venture company does. So already have a product and move everything there. So DCX will be a tier 1 or prime for executing for a program in India. The manufacturing done by, based on the Indian content is required. We need to do the manufacturing DCX and supply to railway or there any prime or NIARC. So this is the modality. But this company required to start to take this JV forward. This is the reason.
Okay, sir. Thank you.
Thank you so much. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all the participants in the conference call, please limit your questions to 2 per participant. Should you have any follow-up questions, please rejoin the queue. The next question is from the line of Sanjay Sood, who's a retail investor. Please go ahead.
Yeah, thank you. My question was already answered.
Thank you, Sanjay.
All right. So the next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello, am I audible?
Yes, you're audible, sir.
Yeah. Please go ahead.
I'm not sure if you have already answered this question. So, but in terms of, what's the opportunity size we are looking at? The segment that we are into, is seeing a lot of growth, right? Most of the companies in this segment are showing abnormally high growth at 25, 30, 35, 40% kind of. So, what is the opportunity size that we see for ourselves, and how do we see the growth for us for next 2 to 3 years? If you have to see a CAGR, what sort of CAGR we might be looking at?
This of course, as I mentioned in the earlier call, we are in the fully sitting with big opportunity, big budget, big opportunity, big client base, and the end customer is huge. So I'm seeing very good growth for the upcoming days. Maybe we'll do better for upcoming days, and there is an opportunity, of course, on the what is the business running, and I'm seeing, you can see good the growth of the upcoming years. Yes.
Sir, any
and
ballpark
PAT
range?
and revenue both.
So any ballpark range we might be looking at? What, 20, 25% or 30%?
It will be a little big. Of course, maybe it is too early. Let my NIARC, that is a railway JV, goes up. That looks very positive side. And definitely it will be range of industry. What you look for presently 25-30% range is not a problem.
Not a problem, right? Of course. And my second question is on your margins. Is there any scope that for margin improvement as well as we scale up, any leverage advantage or any higher margin business that we are getting into through this JV, or so some thought process on that?
Definitely there is a margin improvement in the 3 way I'm telling you. One is your renewal advance system, your own company, and that captive business you can save a lot of money directly, indirectly. There is a definitely margin improvement. And EMS market is very big, and we are fully encouraged with that. There are good margins are expected to come there. And the railway is a OEM business, definitely a very big margin we are thinking to get it. That all depends, these are tender based and what rate we get and everything. But definitely margins are going to increase definitely upcoming days.
And what would be aspirational thing? I mean, over next 2-3 years, if some aspirational margin we want to reach or some range?
Aspiration, see, it is very, very difficult to answer because, I am not given any guidance number and stuff like that. But only on this call I can tell we have a good aspiration, and it is achievable aspiration, not only aspiration, not opportunity is not there. We have a good aspiration, achievable aspiration. That is for sure.
Okay, understood. And in terms of aerospace and defense, what kind of opportunity we see out there?
Of course, that is a major business. Modality you can see on the revenue path. Maybe even though you have your EMS, even though you have a railway, still we have a 50-60% defense business comes out.
On a yearly basis, right?
Overall. Yes. Because that budget also is huge. Right? That budget also, even the offset budget is huge. The pending offset budget is huge. And Make in India budget is huge.
Correct.
And railway budget, next to that, it will be huge. So in the defense and aerospace, still we have a very good 40-50% business comes from the aerospace and defense area.
And this is what we expect in FY24 as well. I mean, 40-50% at least revenue from these two.
Yeah. And 24 majority comes from the aerospace and defense. For the next 25, we can have mix because your revenue started recently, last month, and you have a JV to farm and product to come execute. That revenue take from 25. So 24 will be about 80% is a defense. I can say 90% is the aerospace and defense. Okay. Upcoming years, you can see some both are 40-50 or 40-60%.
Some more diversity.
Growth will be there.
I understood. Yeah. Fair enough. I think that's it from my side, sir. I think excellent result and all the very best to you. Yep. Thank you so much.
Thank you very much.
The next question is from the line of Neha from Bajaj Finserv AMC. Please go ahead.
Hi, sir. Thank you for the opportunity. My question is on the cash flow management from the outstanding trade receivables. How do we see the operating cash flow, especially the working capital, getting affected if the war intensifies? And what percentage of current receivables is from the war?
Excuse me? I'm not able to hear.
Am I audible, sir?
No.
Yeah. My question is on the cash flow management from the outstanding receivables. How do we see the operating cash flows, the working capital getting affected if war intensifies? And what is the current proportion of current receivables from the war-affected areas?
Ranga, you'll answer or should I take the question?
Yeah. You can answer.
I will answer the cash flow and not on the banking system. See, as I mentioned, the war started on October 7th, and Israel was closed. My customer, basically, they're all defense company. They closed 1.5 days. From there, they are working fully. In fact, we have not received a single follow-up from my finance team to marketing to follow up on the payments. Payments are very impact, and the way methodology they are working on the payments and the other modality, it is nothing. It is fully secured, and we are getting all the payments on time. I am not at all seeing any effect in the cash flow or something. I am 100% sure this has been taken care. Company has taken care very well. And we are fully covered with all the money. That's what I like to emphasize here.
Thank you, sir.
Yeah. Thank you.
On the receivables part, if you can just give some more clarity, what would be the proportion out of the current receivables that is expected from these areas?
Ranga, what is the current receivables? You are asking the current it is coming in as per the schedule. I am not seeing any foresee there.
No.
And you want to
No.
Go ahead, Ranga.
The receivables from war-related area only.
Yeah.
The majority of the receivables are coming from Israel. That's what he is trying to highlight. MD is trying to highlight that all the receivables are safe and it will be collected.
Understood, sir. Thank you so much.
Yeah.
Thank you. The next question is from the line of Ronak Jain from Investor. Please go ahead.
Hi, sir. Good evening. Hello.
Yes, Mr. Jain.
Yeah, please. You are. I think echo is coming. The echo is coming on your voice. Can you please
Mr. Jain,
give a gap?
If you are using a loudspeaker, may we request you to use the handset?
Yes, sir. Is it okay now? Is it fine now?
Go ahead. We will try to understand your question. Please go ahead. Maybe some.
So, in terms of managing business expenses, are you taking any steps or in terms of cost cutting or optimizing your business operation efficiencies for the future quarters?
Definitely. You see some of the action plan company has taken already. So we are able to reduce the cost with the banking system and improve our EBITDA. Let us take example of forex loss. We did in fact last quarter. From earlier we used to lose the forex cost. Now company has been taken very good measurement. Instead of losing, we make little bit cash. See, when we go back to 22, we are losing almost 30 crores for the overall year. You can see from last March to till now, we are zero forex loss. Company has been taken care very well on the where is the gap for the save the money and other things, and we are taken care. And also the other modality of handling forex and other things, company making good effort to make further improvement of the profitability. And as you know, on the the company people are in the employee wise very dedicated, and the team is with me from last 10 years majority, and working very limited expenditure in the material wise or the consumable wise or other things, and company is fully conscious to handle such things because this also two internal results to be announced for each. We made each cost center for the supply chain and the production or the housekeeping. There is an individual cost center has been set by company, and every team has been able to deliver much more potential, much more effectiveness on the cost center they are making. But there are benefit to the saving of the company, and well within the budget, and is going on very well. And I'm really happy as a managing director of the company to the performance of cost center, reduction of the banking cost, and the many things. So that's the reason you can see many good progress in adding all things to the PAT. And the company like to do continue further the same exercise.
Thank you for the insight, sir, and all the very best for your future endeavors.
Thank you. Thank you, Ji.
Thank you. The next question is from the line of Kamlesh Bagmar from Lotus Asset Managers. Please go ahead.
Thanks for the opportunity, sir. Just to extend the question on that margin front. So if we see the last year, there was a forex loss of around 7.8 crores. So if we adjust for that, then we have not seen significant growth on the EBITDA or EBIT front. around 7% growth in the EBITDA. If we add back 7.8 crore in the base quarter. So I believe forex loss is more because of the translation, not because of the actual losses.
Ranga, you are able to understand the question? Maybe a lot of noise.
Yeah. See, let me start from the expenses side, which has improved the EBITDA as well as it has brought down the EBITDA. If you see the employee cost for September 22 was 1.47%, and September 23 it is 0.96%. And the next other expenses, if you see, it was 1.39% for September 22, and for September 23 it is 1.08%. These two heads of accounts have contributed to Hello? Can you hear me?
Yeah.
Hello?
Yes, sir, you're audible, sir.
Yeah.
The consumption ratio has gone up from 83.75% to 88.27%. So this has in fact brought down the EBITDA.
Yeah. No, I
hope I have answered your question.
Yeah. Like say in the base quarter there was 7.8 odd crore of forex loss, and that has not recurred in this particular quarter. In fact, you had a forex gain in other income. But if we adjust that 7.8 crore forex loss, like say our EBITDA has hardly grown, like say 7-8% as compared to what a significant growth which we have seen in the revenue. So I just had a question on that front. Because of that forex loss not getting recurred, our earnings has grown, not because of the other parameters. So that's only the query I had.
You're asking about EBITDA only, right? EBITDA.
Yeah. I'm talking about EBITDA, but EBIT or EBITDA. I'm saying that just because you haven't had the forex loss in the quarter, which was there in the last year, which was significant, 7.8 crore. And this quarter we haven't had the forex loss. So as we are saying that we are better managing the forex loss. So what we are doing on that front? What has been done on that front? Because I don't think that in this environment where the currency risk is a big issue, you can't manage it, and the cost to pay for hedging the currency risk is significant. So what additional or what new are we doing to hedge the forex risk?
Yeah, I'll answer that. Earlier in the last year, in the financial year 22-23, the borrowings was in foreign currency.
Okay.
In the current year, the borrowings is in INR. Okay. And as a result, what happened is we need not restate the foreign currency, which we were doing in the last year.
Okay.
That is one big difference. One of the big difference which has contributed to forex income as against forex loss in the last year. The second one is on account of conversion from foreign currency borrowing to borrowing in INR, we have saved interest on working capital to the extent of around 100 to 125 basis points, plus all the inward remittances to the extent of around 90%, we have hedged, thereby earning a premium of around 2 to 2.5%. These are the steps which were taken almost 6 to 8 months back. The result we are seeing now.
And also you can, Ranga, add your hedging when you borrowing the INR, also you hedge that forward cover.
Yes, sir. At the time of borrowing itself, we will hedge the currency.
And there is no forex exposure. When you draw even the INR today, you make the payment of dollar. We hedge the currency and take care of that day currency. So that three things. One is for borrowing in INR and no need to restate the account. And also we hedge the currency, incoming currency, also borrowed currency from rupee to dollar. We are taken care. So hence a significant achievement has been done. And it has been converted to the INR, dollar to INR, again hedge and taken for the upcoming currency. So that is a major thing has been able to save last legacy of 2 years forex loss of 30 crore accumulated for last year. Now we made it zero.
Great, sir. And sir, lastly on the order book, like 1,260 crore order book we have. So now we are moving into railways. So what incremental order book do we see from that particular new vertical which we are entering? And even in the existing operations like aerospace and defense, what additional or what pie of orders we are looking at? Because at least we can, you can give a outlook on the order book pie which we are looking at, not on the win rate or success rate, at least on the market size or the area which we are targeting.
Okay. See, as I mentioned, upcoming days, and the company has been taken steps for the business side, for the offset, non-offset, railway business, EMS opportunity, or the Make in India program. We expected a very good opportunity, and we are very confident. There are presently I don't have any numbers with me, and even though if I have a PO, I can disclose to you. And we are in the pipeline is very good, and all the three areas for the Make in India and railway. But of course, you can see some railway from next year only, because just now it is a 3 months we have a JV, and things are going very smoothly, and it's a very, very technologically, it's a global tech, not only for India. This is a global technology what we adopted, and there are big opportunity within India is a big market, and very, very, very good opportunity. And also the global, we are working with some global supply also. So I cannot tell you the numbers presently for the railway business. Similarly, with other area other than Israel, India, and existing territory, we are moving to the European market. We are going to the US market, and things are very bright, and there are appetite. People like OEMs, they want supplier like us, because we have a 12 years legacy in DCX on the defense and aerospace. Adequate the licenses, majorly on the defense industrial license, and good infrastructure in the including the cable harness, and also we are started PCB assembly, system integration, and a good cash flow and management of the working capital management with the 1,000 crore plus limit. No MSME company has this much limit. This is the one area defense company required a lot of BG limits or the cash flow limits to run this. And still we are an MSME company where the offset they will take place compared to other company in India. And this size of company having this facility, not even some company have a MSME. If there is a rule in DPP 2020, the defense procurement policy, if the foreign OEM get the work done in MSME company, they will get 1.5 times offset credit. In this moment, as per my knowledge, DCX is the only MSME company in this segment. So there are chances of getting big POs and big movement. It is happening with the Indian defense sector. We have a better opportunity here. Rather there is a lot of support from the government for the MSME company. There is an advantage for foreign OEMs to come to us to enjoy their 1.5 offset credit. So hence, keeping all this in our plate, we are very much confident to have more PO and more EBITDA more revenue start coming to the company in upcoming days.
Thanks a lot, sir, and the best of luck.
Thank you. Thank you very much.
Thank you. The next question is from the line of Molly, who's an individual investor. Please go ahead.
Sir, we did the backward integration through Ranil Advanced Systems. So in kind of percentages, so what kind of percentage are we backwardly integrated?
See, as you mentioned, we are in the electronic segment, and major raw material to build a module, it is a PCB. It is a high cost and high value and high technology. So I can say in the modality wise and the cost wise, about any system integration, electronics about 70 to 80% of the value. Suppose you build a $100 product, you require about $80 is the PCB cost. That we are building, but not like all $80 you buy from Ranil, because there are other suppliers to manage the supply chain system. Not on capacity, there are the process to be continue for maintaining. Finally, the majority we expect in the Ranil to take care of the 70% of the buys. We expected to do about 30 to 40% in-house. That's what, this is the only ballpark figure I give you now, right now.
Okay, thank you, sir. And one more thing, recently we added Amtech as a client. So in which sector are we going to serve that client? I mean, after going through website, there are a lot of sectors they are serving. So just wanted to see.
Shiva, take the question.
Hello. Sorry, I couldn't hear you. Could you repeat, please?
Recently we added Amtech client in USA, right? So after going through their website, they are serving in multiple sectors, including solar as well and clean energy as well. So which sector we are going to serve to that client?
Right now we are serving in their control systems and the power division sector. As you know, they are into more than 30 different verticals of business.
Yes,
so as of now, we have been interacting with about 6 of their divisions, and most of them are into power and control system division.
Okay. Thank you, sir. Thank you. That's all from my end.
And we are also exploring other business verticals of Amtech.
Okay, sir. Thank you very much.
Thank you. The next question is from the line of Shunit, who is an individual investor. Please go ahead.
Hello, I am audible?
Yes, you're audible, sir.
Hello?
Yes, sir, you're audible. Please proceed.
No, my question has already been asked. It was on the order book. So just congratulations for the excellent show. And we hope that you will be able to keep up the show going forward. Thank you.
Thank you very much.
Thank you. The last question is from the line of Praveen Gramle from Ananya Research. Please go ahead.
Yeah, good evening to you, sir, and congrats on the great set of numbers. I think most of the questions which have been asked, they have been answered by this day. My query is, the margin profile, are we going to, next 2 years, 2-3 years, do we see the same number of margin will be able to continue? Can you throw some light on that, sir?
Of course, on the upcoming days and more than anything, we need to concentrate our bottom line and the revenue top line. And as I explained in the earlier, once again, let me reiterate. And we are started with a cable company, then system integration has been upgraded, then kitting, then PCB assembly. See, these areas all give, if you do a lot of in-house things, then definitely your margin will go up. And also, once you diversification your the business area of EMS or the cable or the system integration, definitely we have a much better margin in upcoming days. And the company is fully focused on the getting new orders, new verticals, and new business in EMS and also the cable, what we are looking for a bigger opportunity in upcoming days. So definitely we will not disappoint all my investors, and we are hopefully getting more opportunity in this area. And from, of course, once I add more vertical, definitely there are margin improvement on the company, right? So similarly, we are planned accordingly, and we are very carefully invested on EMS or the upgradation facility of cable division or something, and the company is fully focused on the improvement of margin and the revenue. And we give one-stop solution, and where customer likes, no need to go for a PCB with one guy, cable with another guy, and system integration or kitting. So mainly because of all put together, we have a capability of trained manpower and technical team so that to take care of all these three divisions. Yeah, definitely we are working on to improve our margins and revenue. Yes.
Great. Sir, another question that I have is, any of the contract that we have currently, if the prices fluctuate, do we have a...
Sorry to interrupt. Mr. Praveen, there is a lot of disturbance from your line. We are not able to understand properly.
Am I audible to you now?
Yes.
Sir, my question is, if in this current contract, if the prices fluctuate, do we have a pass on the contract on the pricing side?
Price increase. Oh, okay. You are talking about the bomb guarantee, right? Okay.
Yes.
See, literally I was allowed to answer this question. Till now nobody asked. Thank you. See, when we signed a contract with our foreign OEM, majority of the PO comes with the major condition company puts. Because today I submit a quotation, I will get the PO in 6 months. The PO will get executed in 3 years, the schedule, because of the high value delivery schedule, everything. So today, let us take quote for the bomb cost of $100. And when I buy the part after 1 year, it will take about 10%, 20% hike. Correct? That's what is worried about because of the semiconductor price and fluctuation. Definitely going to happen. Definitely not going to come down. There is a clause in each and every contract of DCX with the foreign OEM. Any fluctuation in the raw material cost, they have to compensate on the money. That we have taken care very well. So suppose I quoted $100. When I buy, it become $110. The $10 to be given to the company back, which we have to, of course, there are procedures to follow. We need to give the proof of purchase. The price is high, and you cannot bill every month. Everything will be finished in the last quarter, last year end. So that has been taken care very well. And nothing will lose, and we are taken care fully, complete proof of the bomb guarantee.
Sir, will there be a lag effect, like this settlement will happen every quarter, or what is it, lag time?
No. Normally, it is difficult to control every quarterly. What we'll do, suppose there is one IC, $10. When we go on a purchase, become $12. So before purchase, we need to inform customer, boss, I quoted $10, now it's $12. You have any better source? You provide me. Or I will give me a clearance to buy. So after getting all this approval, we will going to keep everything ready. Then year end, only we discussed, because quarterly maintaining very difficult. We normally bill in the month of March. All the ikkata karke, we will put it in the overall consolidated invoice. Price variable will be put, because these all big company, big POs comes with a PO. Going amendment every time on the PO takes time. We start circulating this price variation from the January, so that by March they amend the PO and get our payment. This is a process.
This last question is, sir, this happens on vice versa, like we talked about the price increase. If the price decreases, then the customer will ask for a rebate.
Yes, there is a clause in the contract. If the price, what we quoted, price for let us take $1, one register we quoted. When you buy the part of 50 cents, that is 60-40 share will be given to us. That means 60% will keep it, 40% will give a discount to customer. That clause also is there in the BOM. That means we'll be awarded 60% of the, you understand, na? $1 you quoted, when we purchase at 50 cents, 50 cents of the saving will get 60%, 40% to be passed on to customer. This is a contract.
Excellent. Yeah. Thanks. I think I'm done with my questions. All the very best. Look forward to catching in the next quarter again. Thank you so much, sir.
Thank you. Thank you so much.
Thank you. As there are no further questions from the participants, I now hand the conference over to Dr. Raghavendra Rao for closing comments. Thank you, sir.
Thank you. I wanted to extend my appreciation to the entire DCX team for their dedication and hard work. I like to also thanks AddFactor arranging this, our IR agency, and our customer, supplier, and banker for their support. It is thanks once again for joining my sincere thanks and appreciation of one of all of you for joining and asking valuable questions. And thank you so much for your cooperation. And namaste, thanks, Jai Hind, Jai Karnataka.
Thank you so much. On behalf of DCX Systems Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.